Next up, we're going to be talking about IPDA market cycles. So what does IPDA stand for? So IPDA stands for Interbank Price Delivery Algorithm. This is the algorithm which makes the market move a certain way. And this algorithm has certain cycles. So over here we have this price delivery depiction. We're starting with retracement, we've got reversal, consolidation, and expansion. Price only has 4 stages and it's always doing one of these. There's nothing else it does. So we have that consolidation, that expansion, retracement, and reversal. Now we're gonna depict what it can do and also importantly what it cannot do, so you can anticipate what in which cycle it is, and if you know what it shouldn't do, then you have a higher probability of framing your trade setup. So over here, firstly, price always goes from a consolidation to an expansion next. Price can go from an expansion into a retracement. Price can also go from an expansion into a reversal, and price can also go from an expansion into a consolidation. Now, what price never does is go from a consolidation into a reversal, and we'll outline in the charts later how that looks like. And price can never go from a consolidation into a retracement. When price looks like it's delivering a consolidation to reversal, it's a trap and you will be followed by an AMD reversal pattern. So if you're not familiar with AMD, it stands for accumulation, manipulation, and distribution. So you can already see in the name AMD, we've got that manipulation. So think about what we just said, right? You cannot go from a consolidation into a reversal because consolidation is accumulation, right? The A in AMD, but we cannot go into a reversal from a consolidation. But if we do trade, let's say we are bullish and we have a consolidation and price starts to go lower, reversing from that consolidation, which it cannot do, it's a manipulation, right? For us to continue higher later, which will be the distribution phase, and we will outline those in the charts coming up. Once price has gone from consolidation to expansion, there's only 2 things that can happen from the expansion. It's from expansion to reversal, which could be an AMD reversal pattern, which I just outlined, and we have expansion into retracement, which could be a return to an order block or a fair value gap to continue up. So how does that look like, right? What do we see over here? We've got an old low down here, right? External range liquidity. So what do we want to do once we hit external range liquidity? We want to go to internal range liquidity, right? So we have a draw liquidity up higher. So if we look at this consolidation, can we reverse from this? We have a break of structure over here, but no, we are not reversing from this. Why? Because we have this consolidation and we're still in bearish order flow, right? Yes, we did take out this low, but look at how these lows are formed, right? We have this equal lows. So what's more likely to happen is that price engineers liquidity up here, right? In relative equal highs. But in the process, it does break structure over here, right? But it's a trap because we still have that consolidation. So it shouldn't reverse from here. Now we have one more rate lower and then expansion up higher. So this is a classic AMD schematic, right? Accumulation down here, right? Then a manipulation phase upwards, which it shouldn't do. So that's why it's called manipulation. Then distributing lower and then eventually following the true market direction after rating those sell stops. And here we can see with a depiction of that accumulation phase, right? The manipulation phase below sell stops, right? Order pairing, again, external range liquidity, then distributing up higher. In the process, highly likely to leave a fair value gap behind or an order block, and then we can distribute higher from that point on out. Continuation patterns. Only 2 things can happen here after it starts consolidating. Continuation expansion from the consolidation or an AMD bullish or bearish. For price to reverse, it has to go higher first. Right over here, we had this AMD down here, right? Accumulation, manipulation, and then distribution up higher. Now we're in bullish order flow, right? Draw on liquidity up in this fair value gap up here, right? Sell stops have been paired up with buy orders from smart money. So we know we shouldn't go down here anymore. So we are in bullish order flow. So we have expansion into consolidation. So what does price action never do after consolidation? It never reverses, right? So if we were to move down lower than this accumulation over here, or this consolidation, we can expect that to be a fake move. So it should move like this, right? But if it does move a little bit lower, we can see an AMD model form, right? And then it should look something like this. Again, red as in the manipulation phase, right? We should not reverse from this consolidation. Keep that in mind. If you are in bullish order flow and you see a consolidation and we have not, importantly, not hit a target yet, a buy side target or internal or external range, we can expect that to be a manipulation phase, which we can see over down here. Now expanding up higher into a distribution phase, you can see this probably will become a breaker block. If there's a fair value gap coupled up with that breaker block, makes it even higher probability to distribute up higher. So until we hit that internal range liquidity. Now over here we have the same pattern but reversed, right? We don't necessarily have to hit this target. We can also reject over here and not reach this target. We're not always 100% going into internal, external. There might be a different level here which it's keying off of. So here we can see also accumulation, and then we have a manipulation up higher and then distribution down lower. So this is an expansion into this is a consolidation into expansion and then a reversal, right? And then retracement into expansion. Now how does that look like on a candlestick chart, right? Euro, British pound, daily chart. Again, think about the previous lessons, right? Failure swings, order pairing, external range and internal range, right? What can we see over here? Again, buy stops have been rated, order pairing happening above marketplace here. What are we having here? A failure swing, right? So we have a draw on liquidity. We have a break of structure. Look at all these failure swings down here, right? Failing to take out these lows, so we have a draw on liquidity down lower. We fill up this daily fair value gap. Sell stops into external range liquidity. And dropping down into a lower time frame chart, which makes it easier to see what we're doing, right? We have our higher time frame target. We know buy stops have been rated and orders have been paired for sells. Now we're going into a lower time frame chart to see how that looks like, right? We have a high resistance liquidity run up here, order pairing once again, and then breaking down structure lower. And remember, it's of a key level, right? Key levels, it has to hit a key level. Now breaking down lower and we start to accumulate or consolidate. So price can not reverse from a consolidation, right? So if it were to do a fake move up, it is manipulation and we should still continue down lower because this is the draw on liquidity, right? So it could either do this or it could do this, right? So back up into this one, right? This would be an AMD and then that would be a accumulation, manipulation, distribution phase. Also consolidation into expansion reversal because it cannot reverse from a consolidation, and this would be a consolidation into expansion again, distributing lower, right? So as explained earlier, expansion into consolidation, only two things can happen now: continuation from a consolidation into a retracement back into what? Maybe a order block or a fair value gap, as the draw on liquidity has not been reached yet, so it has to do a expansion into a retracement to continue down lower into those sell stops, right? We have all these targets down here, all these sell stops are still present. These relative equal highs or relative equal lows rather are still present. This is a very nice draw on liquidity, and we know this consolidation cannot reverse, right? So price breaks down lower, goes back into a retracement, so that market cycle is correct, right? Consolidation, expansion, retracement, expansion, right? We're hitting this order block, perfect area in premium, right? Also always draw out your discount and premium levels. So this is the dealing range over here, retracement into premium, into that order block, and then finally we hit those sell stops. So over here we have a USD Canadian dollar 4-hour chart. Sell side of the curve down here. We got a reversal down here and then into buy side of the curve. Now what is the drawn liquidity, right? After we reverse down here, we have this fair value gap. So we go from external, right? This lows has been rated. Then we go into internal. We can see this reversal happening down here, taking out this relative equal lows. And then think about the order blocks, right? External, internal range liquidity and price respecting bullish arrays, making this buy side of the curve. Now, draw on liquidity, remember, is up in here. And now we're going to look at where the market cycles come into play. So we can see expansion into reversal, right? Then what happens over here? We have a small consolidation. We expand up higher. Then we retrace back into the range, right? And then we have this order block right over here, which we talked about in the previous lesson. We're taking out these lows down here with this candle, breaking up structure. So this should support price action to continue up higher. And the market cycles also tell. Right? We have this fair value gap, retracement back into, and we have another expansion leg. So where do we consolidate again? We have this piece of price action over here, consolidating, right? We cannot reverse from a consolidation. So what do we need to do? Expansion, right? It's that simple. Think about those market cycles every time you look at the charts. With these tools already, you have that internal range, external range, right? You've got that order pairing, engineered liquidity, and now with the market cycles, you even have a more clear vision of what needs to happen and where price needs to draw into. So this consolidation, we have an expansion afterwards. What happens after this expansion? We have another consolidation. So do we need to go down from here? We did rate this high, right? But no, we are in a consolidation market cycle, right? So we don't reverse from a consolidation. So we keep on pushing up and expanding higher until we reach that drawn liquidity, right? And eventually we hit it over here. We hit that drawn liquidity, right? But what does price action start to do? It starts to consolidate again, right? So what can't we do once we consolidate? We cannot reverse, right? So we see this move down. You're asking yourself, reversal, right? No, it cannot happen because the market cycles tell us we go from consolidation into expansion, not from a consolidation into a reversal, right? So this move down, again, AMD model, right? Think about that manipulation phase. So we need to trade lower before, we need to trade higher before we can trade lower because we cannot reverse from this consolidation. Manipulation phase happens up here. Again, order pairing, right, above old highs, continuing down lower, breaking structure, and then we get that same expansion leg lower. And then what happens again? After we have an expansion into a reversal, and then we start to accumulate or consolidate. So what cannot happen from here? We cannot reverse up, right? Because we're going into bearish order flow after rating buy stops. We have thus that order pairing up here, right? Breaking structure lower, and the current market cycle is expansion higher into a reversal, going into, if you reverse, you're going into a different order flow. So we're going into bearish order flow. Now we're starting to accumulate or consolidate once again, right? So we cannot reverse from this consolidation. We see price does go up. So you should immediately ask yourself, why are we going up after this consolidation, right? It's highly likely it is manipulation, right? So we're going into this fair value gap order block combination. This is a high probability order block, right? Then price continues down lower, expanding. This move up can be a reversal, right? And here we can see the schematic of the AMD, right? I just explained it, and with a little bit more annotations, we can clearly see the accumulation phase into the manipulation phase, and then distribution lower, right? Order pairing happened up here already, so we know we cannot go higher than here, and we broke structure lower.